Welcome to our comprehensive Indian market analysis for first week of June 2025. This was a week defined by the RBI's aggressive monetary policy easing and strong market momentum. The Nifty 50 surged 1.02% to close at 25,003 on Friday, June 6th, while the Sensex gained 0.92% to 82,188, driven primarily by the central bank's surprise 50 basis point rate cut and massive liquidity injection. Let's break down the key events that shaped this remarkable week. The week's defining moment came Friday, June 6, when RBI Governor Sanjay Malhotra delivered a monetary policy surprise that exceeded all expectations. The central bank cut the repo rate by 50 basis points to 5.50%, double the market consensus of 25 basis points. This marked the third consecutive rate cut in 2025, bringing total easing to 100 basis points since February. But the real shock was a 100 basis point CRR cut to 3% to be implemented in four tranches through December 2025. This move will inject 2.5 lakh crore rupees of liquidity into the banking system, an unprecedented liquidity boost. And the policy stance shifted from accommodative to neutral, signaling this aggressive easing cycle may be nearing its end. The RBI revised FY26 inflation projections down to 3.7% from 4%, while maintaining GDP growth forecast at 6.5%, with April CPI at just 3.16%, near 6-year lows. The central bank had clear room for aggressive action. Market reaction was swift and decisive. Bank Nifty surged over 500 points to record highs, while the 10-year government bond yield initially dropped to 6.14% before stabilizing around 6.25% as market absorbed the neutral stance implications. This week trading pattern showed a classic momentum building toward the RBI decision. Monday, June 2nd saw markets opening flat to lower as global uncertainty persisted. Tuesday and Wednesday witnessed consolidation around 24,600 and 24,750 range as markets awaited policy clarity. Thursday, June 5th marked the beginning of the rally, with Sensex gaining 444 points to 81,442 and Nifty rising 131 points to 24,751. This pre-RBI rally was driven by FII buying and expectations of a 25 basis point cut. Friday policy announcement triggered the week's climax, with Nifty breaking through the psychological 25,000 level to close at 25,003, a 1.02% surge. The Sensex added 746 points to 82,188, registering its best single-day gain in 3 weeks. From a technical perspective, Nifty reclaimed its 20-day moving average and established a strong support at 24,600 to 24,700. Resistance now sits at 25,100 to 25,200, with the index showing bullish momentum on higher volumes. India VIX dropped over 4% to 15.08, indicating reduced volatility expectations. Foreign institutional investors' flows turned positive as the RBI policy surprised markets. FII and DIIs were net buyers on June 9th, pumping about 5,500 crore into markets, marking a reversal from recent selling pressure. However, the week also saw some continued FII caution in earlier sessions, with net selling of 3,831 crore rupees on June 12th. DII provided crucial support with 9,394 crore net buying on the same day, demonstrating a domestic institutional confidence in the rate cut cycle. Global markets provided mixed cues during the week. US market showed resilience, with Dow Jones gaining 102 points to 42,968 and S&P 500 rising 23 points to 6,045 in Thursday's session. However, ongoing US-China trade tensions and geopolitical uncertainties kept global sentiment cautious. The first week of June 2025 marked a pivotal moment for Indian markets. The RBI's aggressive easing creates a Goldilocks scenario, strong growth support without inflation concerns. This positions India uniquely among emerging markets facing monetary policy divergence. Technical outlook remains constructive, with Nifty establishing 25,000 as new support and targeting 25,500, 26,000 over the midterm. Bank Nifty record high suggests continued momentum in financial services. This concludes your comprehensive analysis for the first week of June 2025, a week that may be remembered as a turning point for Indian monetary policy and market trajectory. Stay invested, stay informed.